Hey guys, I'm Ron Sneller. Thanks for joining me for this 2024 first quarter market review. Today we're taking a look at the S&P 500 index over the first quarter of 2024. Now, widely regarded as a barometer for the overall stock market, the S&P 500 index tracks the performance of 500 of the largest companies listed on the US stock exchanges. The S&P 500 index adopts what's called a market cap weighting approach, meaning it allocates a higher percentage of the index to companies with larger market capitalizations, adjusting for the number of shares available to trade publicly. Now get this, guys. In the first quarter, the S&P 500 index delivered a whopping total return of 10.6%. 10.6% in just 3 months. This is the 11th best start to a year in all of history. The index hit all-time highs 22 times over this period, with a maximum drawdown of just 1.7% during the quarter. A very exceptional start to the year indeed. Today, we're going to show 3 insightful charts to offer a deeper understanding of the events that unfolded during this extraordinary first quarter of 2024. First, let's talk about the Magnificent Seven. So these Magnificent Seven companies, which are Apple, NVIDIA, Microsoft, Amazon, Tesla, Alphabet, and Meta, they currently boast a combined 28.7% weighting in the S&P 500 index. So last year, 2023, the S&P 500 returned a positive 26.3% total return. Pretty darn good. Out of that return, though, the Magnificent Seven accounted for 60.2% of that return. So the Mag 7 was responsible for almost 2/3 of the S&P 500's gains last year. So far in 2024, at the end of quarter one, the Magnificent Seven accounted for 36.4% of the return. So a little more than 1/3 of that 10.6% return. Now, NVIDIA stood out with an impressive 82% increase, definitely leading the pack in terms of contribution. However, in the first quarter of 2024, not all members of this elite group saw positive growth. In fact, Apple and Tesla experienced declines of 11% for Apple and 29% for Tesla. Together, just Apple and Tesla actually detracted 1.26 percentage points from the market's overall performance. Now, Tesla's downturn was particularly notable, marking it as the poorest performer in the entire S&P 500 index. It actually slipped to 9th position by market capitalization, replaced by Berkshire Hathaway in the 7th slot. So if we were to replace Tesla with Berkshire Hathaway in the Magnificent Seven, that the new Mag 7's contribution to the overall market returns in quarter one would have increased from that 36.4% up to 44%. If we would include Berkshire Hathaway there instead of Tesla. Now that Tesla has dropped to 9th. In 2023, market advances were very concentrated, with the mere 27% of firms within the S&P 500 index surpassing the index overall average performance. The first quarter of 2024, however, marked a significant shift toward a more inclusive rally, with 40% of companies in the index outpacing the overall index. Now, this is good. This indicates a trend toward more widespread market returns. It's broadening the rally. This is a welcome improvement from 2023's narrow gains. And despite the positive change, the proportion of companies outperforming the index, it does remain below the 29-year average of 48%. But at 40%, we've definitely made some strides there. And then on to the final chart. The S&P 500 index total return, again, it surged by 10.6% in the first quarter, but earnings are not expected to grow as quickly. This has led to an increase in the price to earnings multiple for the S&P 500 index. It started the year at 20.2 PE. By the end of March, it was up to 22.4. The expansion this year can be somewhat attributed to the extraordinary price performance of the Magnificent Seven. Their PE has experienced a surge from 30.8% at the beginning of the year to 33.5% as of the end of March. But the PE for the other 493 companies in the S&P 500 index also moved higher from 17.8 PE up to 19.7. This has been your 2024 first quarter market review. I'm Ron Sneller. Thanks for tuning in.